Good morning, everybody. Hope everybody's doing well. Let everybody file in for a minute. Good morning. Good morning. Massive gap up this morning, so hope everybody's enjoying the gap up. Obviously, NVIDIA earnings were pretty good, so. All right. Good morning, everybody. Good morning. Good morning, GGH. Thanks for joining us. Everybody, thanks for joining us. Yep. Yeah, structure's still a total mess though. So we'll kind of go through that, where we're at, where we're gapping at, kind of where we're looking at. 6750 overhead is going to be pretty important. So for the bulls to get above, maintain. So still not out of the woods yet. So yeah, awesome. Perfect. That's the good feed. That's the feedback we want. Appreciate it. Thanks, Pearl. All right, let's go ahead and jump right into it. Thanks everybody for joining us. This is Michael coming to you from Gamma Edge on Thursday, November 20th with our pre-market prep session. As always, we'll cover our three pillars for Gamma Edge: sentiment, structure, and trend. We always like to start with the trend. Obviously, we want to be on the right side of the market, as 75% of the overall stocks and market move with the overall trend. So this is currently our market trend model. Obviously, this is based on the tick index. You can research that at your favorite investing website. Quick orientation: the bolded white line is our intraday instantaneous cumulative tick. Again, this is just indicating buying versus selling. Good morning, CH. Buying versus selling from overall market participants. If you're a bull, you want to see this traversing to the upside from lower left to upper right. And if you're a bear, obviously you want to see it moving to the downside. We place some shorter term momentum moving averages. These are just give us a visual of the overall direction and trend of the market. And then our colored ribbon is our longer look back period. This is how we position our longer term money in the overall market, as well as our mechanical portfolios. So if the bolded white line CT is above the colored ribbon, and we have positive slopes on both of these both of these colored ribbons, the red and cyan, then our mechanical portfolios are turned on. And those includes the wheel strategy as well as our P-trans to PGX strategy. So you can check that out in previous posts. So as of now, though, we're significantly weak in the overall market trend model. This definitely could recover today after the gap up if we continue to see buying in the overall market and not just a one-day kind of flash in the pan move to the upside, kind of knee-jerk reaction. We would have to have significant days of buying sustained to move this white bolded CT back through the colored ribbon and then get this colored ribbon to flip back in the proper order. You can see now that it is actually what we call the ribbon flip. And this could be indicating a longer-term downtrend unless it recovers pretty rapidly. So we'll continue to watch that. Key takeaway yesterday: new highs versus new lows. New lows were significantly outpacing new highs again. And then the filter cumulative tick indicator, this is our institutional plus 1,000, minus 1,000 was below zero again. So again, all of this will have to do a complete about face and flip. And you want to see new highs outpacing new lows. You want to see the filter cumulative tick indicator rising significantly, indicating institutions are buying more than selling, and you want to see the overall market trend model improve. Even with the significant gap up today, we'll see towards the intraday and then end of the day how this finishes the day. And that will give us a much greater indication if market participants are accepting higher prices and are looking to buy into the end of the year, or at least the end of Q4. All right, let's move on to the SPX. We've combined this today because the SPXA, that today is Thursday. Obviously, tomorrow is the last day of expiry for the November monthly. So we've done the composite. Key takeaway here is we still have significant amount of in-the-money puts overhead. You'll notice that key transition area here that I'm discussing, 67.50. So if we get above this and above 67.75, then we'd be a little bit more overall bullish on a longer-term time frame, even though we've had a massive bounce from the lower range, 6,600 to the upside. but we could just be stuck in an overall larger range. And again, these in the money puts overhead are going to continue to be a headwind on the SPX composite as well as the SPXA. So we're going to watch this intently as we traverse through the SPX options complex. All right, let's move on the SPXA. Again, this is expiry is tomorrow. We've dotted this out as these won't matter as much as we're really close to expiry, but the key takeaway is we still have significant amount of in the money puts overhead. Now, these will be flipping to out of the money with this large gap up if it's maintained in that 6750. It is that next area of gradient we need to get over. That is significantly put dominated. Then you see above 6,800 would be the next area to the upside would watch with an intermediate strike around 67.75. So again, staying above the overall transitions will be bullish if that is maintained. If we start dropping back below into the transitions, again, these puts will be driven back in the money and again cause a significant headwind. So we'll watch this as we traverse throughout the day. Again, expiry tomorrow though, so these are not necessarily significantly trading for today. All right, let's move on the SPXP. These are our speed boats. Obviously, these contracts turn over much more rapidly, so we can look at this for an overall intraday structure as well as heading into Friday. Put dominated on this overall full expiry. Transition areas are noted 6740, 6750 again is where the implied open was going to be. It had moved up. And then 6750 is that gradient overhead that's really going to be our failure point or the acceptance point for a possible move higher towards 6775 and 6880. So if we fail, we'll move on to 0DT here in a few minutes. But if we fail the 6750, this may be an opportunity to short for a move back down and towards the transition levels and even possibly to back down towards 6700. If we're above 6750, then price appreciation would be more favorable. If we're within this overall large transition area, which we'll talk about, it's going to be extremely noisy and will be driven by the intraday call versus put volume. All right, let's move on the SPXP GEX ratio. Again, this is like a put call ratio, but we add a time component, which is gamma. This is short dated call gamma versus short dated put gamma. I forced the spot price at 67.42, which is nice about all of our tools here at Game Edge. If we have a large gap up or a gap down, we can force spot price pre-market, and that'll give us an overall landscape view instead of static view of what is happening. So this is, in real time, if we gap to this price point, this will be what's happening within the overall structure. So if we gap up towards 67.42 or 67.50, we see this as a positive slope on the overall GEX ratio. Again, that's indicating short dated out of the money call speculation would be coming in and being taken as we drive all those out of the money calls above us to in the money via that gap up. So that will continue to be supportive. So we continue to watch that on that positive slope. So again, this would be a bullish development as previously we've been below one. That is put speculators maintaining overall control and the put gamma is in control. So we'll watch this gap up and see really how we maintain or handle the day. But this is basically saying if we gap up and maintain a spot price above those transitions or around the 6742 level, this will be a bullish overall development. All right, moving on to the delta balance. So I've forced the spot price there at 67.42. Again, you'll notice that, again, these are positive slopes as we cross back above zero here via the expiry for today. Again, the left-hand plane, is the red dotted line that's below spot price. That's your in-the-money calls, out-of-the-money puts. So you can see how much we've forced with the gap up to the in-the-money calls and then out-of-the-money puts. And then the right-hand plane is the speculation, though, is the out-of-the-money call speculation. So you notice that's still below zero, even with the spot price forced up. That's indicating that we do not have a significant amount of out-of-the-money call speculation. We've been discussing this within GE and within our members is we need to see this out-of-the-money call speculation come in to continue to drive price higher. As we open calls, our book gets longer, positive delta, dealer book gets negative, and they have to buy to hedge. If we do not see, even with this gap up, the out-of-the-money call speculation, most likely the gap up will fail or at least see some pullback and some overall consolidation. Now, key takeaway is the blue dotted line. This is the aggregate delta balance. Obviously, since we have a significant amount of in-the-money calls being driven in the money, in-the-money calls, being driven in the money versus gap up, then our delta balance actually goes up above zero. And then our structure on out in time, we do see some improvement, but then we do start seeing some weakness into next week, into the end of next week. So we'll continue to watch this structure as well to see if it improves with the gap up and we actually see speculators come in and being maintained on the call side, or does this just a quick flash in the pan and then we see weakness into the end of the month heading into December. All right, let's move on to the SPXP 0 DTE. Put dominated to start the day. Obviously, this could flip because of our large gap up. We'll continue to obviously watch that as soon as it opens. You see negative net GEX is not significantly negative, so we're able to flip that to positive if we capture all of these out of the money calls and drive all these in the money puts out of the money. Key area gradient overhead is at 6750. I already talked about. Top of DS is around 6700. Round Livermore level, just a psychological level. So any pullback to that would need to be supportive, and the bulls would need to step up and be maintained. If we drop into this overall transition area, it's going to be extremely noisy. You'll notice the low exposure net OI. This will be significantly driven by intraday call versus put speculation. So however market participants are positioning intraday, and we'll be able to monitor that via our vol-m command that we continue to post. Really an essential, vital tool for us to understand where market participants are positioning for in the day, intraday, and the overall trend for the day. So again, you'll notice, again, extremely noisy. If we drop back within the transition, these would be a no trade zone for us here at GameEdge if we drop back in there, because it just can be extremely choppy unless we see some overall data that's telling us that we have a significant supportive type action via the call and put centroids are positive, or significant negative put driven out of the money speculation with negative centroids also. So again, those are key areas we'll watch. And then above 6750, 6775 would be the next area overhead, which I'll talk about here on the trading view chart. So our scripts are overlaid from this morning, obviously gapping above these transition areas I talked about, above zero GEX. This is full expiry. The full expiry script and overlay. 6750 is already being that contentious local peak that we're seeing failure at. So again, this could be a possible area to short. If we continue to fail that area, if we get above, then we'd look for price to appreciate towards that P-trans level of the full expiry at 67.75. So that would be a trade from 67.50 to 67.75. We'd be long. We'd be short the 67.50 on a failure for a move back down towards 67.30 and ultimately 6700 if we see the market trend model continue to be weak, as well as intraday speculation to the downside. All right, hopefully that helps everybody today. Obviously, a very noisy, messy structure, low exposure within this area that we're actually gapping above. So it will be really vital to maintain our price above that for a more advantageous environment, call-dominated, positive gamma for price appreciation. If we drop back within this transition, all bets are off, and it could just be extremely choppy. With that, this is being presented by GameEdge, so make sure you check us out at gameedge.us newsletter. Put your email in here. This will take you to our toolkit, our thesis, our strategies, and how we look at everything via the SPX option structure. And then click on free courses, GameEdge Fast Pass, again, the flagship options course that we go through for all of our tools. So with that, I'd be happy to answer any questions or go through any individual equities via our web app for a few minutes. If anybody wants to post some tickers in the overall chat, be happy to cover. So absolutely, CH. Thanks. And make sure you take a look back at our X posts as well as our YouTube posts previously. We had a ton of content. Our blog has specific education articles around certain content that we can talk about. Obviously, we've talked about Vanna. We've talked about put options. We've talked about the wheel strategy, all of our mechanical portfolios, zero DT structure, how we use the GEX ratio, our P-trans to P-GEX strategy with significant outperforming SPX buy and hold by a large margin, and how we trade our transition zones. So again, check out our blog. All of our education is there and free for everybody. So. All right. Thanks, everybody, for joining us again. Like and subscribe on X and YouTube. We'll be notified. Good morning, Tom. You'll be notified when we go live, and this recording will be live or will be on YouTube as well as X, so you can go back and view it if you missed the previous portion or the beginning portion. So, all right, make it a great day, everybody. And as always, manage risk. Thanks.